You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. Bitcoin, Ether, Ripple, Litecoin, and more. Cryptocurrencies and other digital assets are taking the financial world by storm. This exploding market provides everything a savvy trader needs: volatility, volume, and liquidity, provided you know how to find it. That's where we come in. Welcome to the Crypto Rundown. Each week, we'll break down the latest trading activity, trends, and developments on everything from coins to tokens, futures, and even OTC options. If it's moving the crypto markets, then you'll find it on the Crypto Rundown. The Crypto Rundown is brought to you by Acuna Capital. Known as the new wave in tech and trading, Acuna is a leading derivatives market maker in traditional asset classes. As one of the first trading firms to make markets on Bitcoin futures, Acuna is also proud to be an innovator in the cryptocurrency space. Through a collaborative flow of knowledge between developers, quants, and traders, Acuna designs and implements their own low-latency technologies, trading strategies, and mathematical models. To learn more about our rapidly growing firm, please visit acunacapital.com. Now it's time to dive into the exploding world of cryptocurrencies and digital assets. It's time for the Crypto Rundown.
All right, everybody, that music means it's time once again for the world of the Crypto Rundown. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. We have a full month under our belts here now on this new Crypto Rundown program. We love you guys' feedback, love you guys' suggestions for topics, for guests, all sorts of fun stuff. We're going to work them all into the future programs. Don't you worry. Of course, you guys can join us live every Monday, 4 p.m. Central, 5 p.m. Eastern, a little bit different time than the rest of our programming on our network because so many of the listeners and so many of the contributors to this show are on a different time zone. So it makes it easier for them. I understand if it's a later time for you, you want to listen on demand, we understand. You can get this, of course, wherever you get all of our other fine programs here on the old network. Of course, just grab our app as well that has all of it baked in there. You don't have to worry about anything then because it'll all be delivered there the second it goes live. And of course, however you listen live after the fact, make sure you hit us up, questions, comments, insights. We do indeed enjoy hearing from you guys. And I have a great guest joining me on the program today. So without further ado, let's keep on rolling right on into the Crypto Hot Seat.
Forget about cold storage. It's time to turn up the heat on thought leaders from the world of cryptocurrencies and digital assets. It's time to take their place on the Crypto Hot Seat.
All right, everybody, welcome to the Crypto Hot Seat, the portion of the show we welcome on guests from throughout the world of crypto assets and trading and the universe they're in, and proceed to pick their brains for the benefit of you, the listener. And today's guest is a newcomer to the program and indeed to the network. He is Zac Prince, the CEO and founder over there at Blockfi. Zac, welcome to the Crypto Rundown.
Hey, Mark, thanks for having me.
I hope that hot seat isn't too uncomfortable. We try to make it comfortable, even though, you know, the name implies a little bit of lack of comfort, shall we say.
No, I'm in New York, so it's still nice and cold here. No worries.
There you go. Well, it's about 70 degrees warmer here than it was a week ago, too. So things are nice here as well. Zac, as we are wont to do with all of our first timers on the network, why don't you go ahead and give our audience a little bit of an overview of your background and how you found your way to starting Blockfi?
Sure. So my background has always been in venture-backed technology companies. I was originally in the advertising technology sector and part of two successful startups there, one that was acquired by Google. And then more recently and more relevantly for Blockfi, prior to starting the company, I was working in the online lending sector at two different companies. One that was a broker-dealer, RIA, and data and trading platform in the online lending sector that worked with institutional capital like banks, private equity, credit funds, family offices, and then all of the largest online loan originators like Lending Club, SoFi, Prosper, Funding Circle, and helped them more efficiently transact with each other. And then after that, I worked at a consumer lender that financed large ticket retail purchases at the point of sale for non-prime and thin prime consumers. And along the way, kind of early 2015, I started getting personally interested in crypto, basically as the result of a conversation at a cocktail event where someone told me that Bitcoin was a great buy, and so I bought some. I think Bitcoin was around 300 at the time. Sold it a couple months later because it had gone up to 600, and then bought back in at a higher price. And then throughout 2016, I kind of went down the proverbial crypto rabbit hole. And at a certain point, my wife said, "You're talking about this way too much, and I don't want to talk about it." So I started going to meetups. And then early 2017, I saw the composition of those meetups change from being some of the earliest adopters to also including bankers, venture capitalists, and then obviously the market was starting to gain some steam at that point. Market cap crossed $100 billion. And I also had an interesting experience with a bank that I was trying to get a commercial real estate investment loan with. And I listed my crypto assets on my financial statement that I submitted to the bank. And they had a hilarious reaction to that and certainly didn't value them at all. And that was kind of my light bulb moment that just like any other asset class, there's going to be a need for retail and corporate debt and credit products in the crypto ecosystem. And that idea is what led me to start Blockfi in the summer of 2017.
It's funny, everyone we bring on here in the crypto space, they always have that moment, that catalyst moment when the light flips on, that come to Jesus moment, if you will, where they start to realize this crypto thing is for real. Maybe there's an opportunity for them. And yours is certainly unique. I can't say I've had anyone else on the network here come in here and saying they were really the catalyst for their business was their bank effectively turning down their loan or pushing back on their loan because they didn't really understand and know how to value crypto assets. So certainly an opportunity was born therein, Zac. So well done. You have a unique origin story as our program goes here.
Yeah, thanks. The bank was pretty hilarious, actually. I was able to get the loan, but it was a sleepy regional bank in Texas, and they had never heard of Bitcoin before, and their compliance team accused me of potentially being involved in some illicit activity, which I wasn't, but it was a funny experience.
It sounds like you like the new marketing push coming out of Gemini, which is that we need new rules and a new perception because crypto has been misperceived as being the domain of money launderers and everything else. It sounds like you're on board with that trend there, Zac.
I was actually a big fan of the campaign. My initial reaction to it was like, whoa, crypto needs rules. I don't know how people are going to respond to that given the kind of libertarian nature of cryptocurrency and the decentralized protocol component to it. But as I just saw the ads everywhere in New York, we're based in New York. One, I think it's great for crypto to be getting that level of exposure. And two, I think there were absolutely some people who thought, oh, wait, maybe crypto is regulated now. Maybe there's a safe place where I can go buy it. And it brought that conversation to the top of the minds of a lot of people who weren't already in the space, which is obviously just a net positive.
Well, let's talk about what you guys are doing over there at Blockfi. You kind of laid it out. The lending space is where you're operating, so someone can effectively come to you with crypto assets. We know this has been a problem in the past, getting quote-unquote fiat currency to use and trade against it. So you guys are effectively taking their crypto assets, using them as collateral and lending against that. Is that pretty much an easy elevator pitch?
Yeah, we're going a bit bigger than that now. That was the first product that we launched, which we launched in January of 2018. And what we're really building currently is a diversified suite of retail banking products that are supported by Blockfi's access to institutional capital markets for crypto. So the first product that we started with was basically a margin loan. If you have crypto, you don't want to sell it, but you want some liquidity in the form of USD, you can get a low-cost loan from Blockfi, and we're now lending at rates as low as 4.5% annually to borrow USD secured by your Bitcoin, Ether, or Litecoin. The second product that we launched in January of this year is a crypto savings account. So if you have some Bitcoin or Ether that you're holding and you're not planning on trading it and you want to earn interest on it, you can store it with Blockfi, earn a 6% annual yield that's paid out monthly and compounds. And we think that that is going to be a big theme for this year of utility value that's added to crypto, that ability to get a yield on it. And then down the road, we're planning on launching things in the payment sector, specifically credit cards and prepaid cards. And then further out, we expect to do some things on the trading side as well. But all fitting within this theme of aggregation of retail and corporate products, adding more utility to crypto, and then supporting those products that we're bringing to retail and corporates via our access to institutional funding and institutional capital markets for the space.
So it sounds like you guys have obviously a foothold in the retail space, but you're also playing in a little bit in the institutional space as well. So it sounds like when the question is, who's using your platforms, a little bit of all of the above. You want to lend to the retail, like you mentioned, forthcoming with the credit cards and the savings account, but also I'd imagine trading firms and others are utilizing your services to get some flow back with their crypto assets. Is that a safe description?
Yeah, we think of our core client as being retail and corporate, and then there are things that we do with institutions to facilitate those. So specifically, some of the things we've done so far are we were the first company to raise a institutional loan purchasing facility, which we announced last summer, which was $50 million with Galaxy Digital. And then to create the yield that we're providing to depositors, we are active in the crypto lending market. So we're a crypto debt liquidity provider to institutional trading firms, corporates that need to borrow crypto. So we're interacting on both sides of the market, but the platform is built in a way that's retail friendly, basically meaning that everything's online, it's all automated. We've got customer service and licenses that enable us to support retail clientele, but we have a lot of interactions with the institutional market as well.
So walk us through the process. How does that work? Let's say someone comes to you, they have $1 million and pick your product, Bitcoin, Ether, whatever you want it to be, and they want to get a loan against that. Obviously, we're seeing there's a lot of concern in the space right now about the custody process. We've still seen a lot of hacks. We had another exchange. The founder died and he took his passwords with him. So there's a lot of concern about that, particularly on the institutional side, but also in the retail. So if I come to you with $1 million worth of Bitcoin and I want a loan against it, how does that work? Do I have to surrender the assets to you and then you give me the quote unquote fiat in return, or how does that whole process work?
Yeah, sure. So basically you can go to our website. We have loan calculators on there so you can price out how much the loan would cost, what your payments would be. Once you're comfortable with that, you submit an application, you get an instant decision, and then you'll see a few different pricing options. So we offer different interest rates that correspond to loan to value ratios. So with $1 million, for example, worth of Bitcoin, if you wanted to borrow $500,000 worth of USD, it would cost you about 11% per year on the high end. And on the low end, if you wanted to borrow $400,000 or $250,000, it would cost you 4.5% per year. The way that we custody the crypto assets is via a partnership with Gemini. So they're, custody billions of dollars of assets. They're regulated. They have insurance on their hot wallets. They're SOC 2 compliant. We decided really early on that custody wasn't something that we wanted to build ourselves. So once you sign your loan agreement, you get a unique deposit address. You send your crypto to that deposit address. Gemini keeps it safe, and we wire the funds to your bank account. That entire process, we can go end to end in 30 minutes or less.
That's surprisingly rapid turnaround. We hear horror stories in the crypto space of things taking hours for a simple trade. So to have it all done in 30 minutes, that sounds fairly rapid. And I can certainly understand why you wouldn't want to deal with the headaches of the custody issue, because you're right, that turns you overnight into a target for pretty much every hacker on the planet, right? So let Gemini do it. They've built up some infrastructure to do just that. So that certainly will, I think, alleviate some of the concerns where people were saying, hey, I have to give up my darling crypto assets. How do I know I'm going to get something safe and secure in return? People are also going to ask out there as well, I'm sure you get this already, how do you verify that someone is coming to you with their crypto assets? Obviously, if they have the keys, if they have the pin to the wallet, then they probably have access to those funds. But how do you verify that someone isn't getting a loan against assets that really aren't theirs at the end of the day? They're just showing you someone else's data and they have the access to it, but maybe it's not their crypto. Have you had any issues with that or any concerns about getting loans against assets that aren't theirs?
Yeah, so we are doing KYC and AML and also some checks on the crypto that's sent to us. So we're looking at, we know who our borrowers are. We're checking them against various watch lists. We're checking them for histories of financial crime. And on the crypto side, we work with a partner that helps us to flag crypto that has, potentially been received via a hack or has been run through darknet markets. So we're basically using the most cutting edge tools you can via partnerships with other companies to check all of those things and make sure that we're not lending against illicit funds or we're not lending to terrorists, et cetera.
Well, you mentioned institutions a few times. I'm curious for you. We've had a variety of guests coming on talking about that side of the space. We've also seen a lot of headlines. Bloomberg has another one, I think, this week where they're saying in their perspective, the overall drumbeat of interest from institutions on the crypto side has slowed. Then we have a lot of guests coming through here who play in that space day to day, and they're singing a very different tune. They're saying institutions are still interested in crypto, but it's perhaps a case of saying one thing to the media and then doing something else behind the scenes, staffing up, continuing to build out functionality, that sort of thing. I'm curious, what has your take been over the past year in terms of institutional demand for crypto? You think it's still there? Is it still strong? Have you seen some flagging? What has been your take over the past crazy, wild 12 months of crypto?
Well, there's certainly been a wane in interest and urgency, but the overall trend line of increasing interest, I don't think has slowed. I think that during the bull run and in the subsequent decline, there was this story of the institutions are coming, and I think that's accurate. I think there are certain institutional investors that are already very active, whether it's proprietary trading firms or family offices or even university endowments that are investing in venture capital funds that are focused on blockchain and cryptocurrency. And I think you'll continue to see adoption from those types and new types of institutional investors. I just think that people forget how long these decision cycles are. So crypto wasn't on anyone's radar until Q4 of 2017. And you don't go and make a, allocation decision for one of these large asset management groups in that fast of a cycle. For some of them you do, but for a lot of them you don't. And so I think that every day that crypto continues to survive and thrive, and you have companies like Blockfi building products that add more utility to the sector, whether it's banking type products or custody type products or asset management vehicles that make it more readily accessible to different types of institutional investors, is a net positive for the space. And there's no silver bullet. So it's not going to be, all of a sudden one day every institutional investor has an allocation. It takes time, it takes work, it takes understanding, education, and we're moving in the right direction generally, in my opinion.
Speaking of moving in the right direction, it's been an interesting topic. You kind of touched on it a little bit earlier, so I'd love to get your thoughts on it in more depth. One of the fascinating trends we've seen in the crypto space, certainly here in Chicago, in our neck of the woods, has been, I think you can call it the melding of the minds, for lack of a better term. You mentioned it earlier, that kind of core libertarian mindset that was where crypto was born, kind of a way to create their own system outside of the current systems that are out there, very much a tech-oriented, libertarian-oriented type of mindset. And now it's starting to come together, as we're all seeing here, with a very heavily regulated financial services type mindset. And so we have, in the case of Chicago, for example, and maybe to a degree in New York as well, these people who are coming at it from a market making or a trading or an exchange perspective, and they have years of deep experience, in our case in the derivatives world or in the cash equities world or other types of arrangements. And now that mindset is coming together with the very different libertarian type tech mindsets, who's probably thinking on a very different wavelength. Seeing these two worlds coming together, sometimes clashing, sometimes working together to lift one up and bring the other down a little bit, it has been kind of fascinating. Has it been a fascinating thing for you to watch as well, Zach. And are you as surprised as I am that these two worlds, what's come out of it so far and what we're seeing coming in the near future?
Yeah, it's been very fascinating. I have somewhat of a unique perspective because I feel like I've lived through one of these waves before in the online lending sector, which when I first started working in it was called the peer-to-peer lending sector. And the whole concept and the whole mindset in the early days of that industry was banks are dead. We had just gotten out of the crash of 08, 09. Everything's going to be done peer-to-peer, including lending. And that worked for a little while, but the sector was pretty small. And then at a certain point, institutional investors started participating, and that really fueled the growth of that sector and continues to maintain that sector today. And it's over 90% of that asset class now is funded institutionally and not peer-to-peer. I think crypto will go through the same wave. I think we're still earlier in the curve. And where it's affected BlockFi specifically is you touched on it, where there's like a part of your intro to the show where you're saying we're not talking about custody, we're talking about other stuff. There's a concept in crypto of if you don't hold your private keys, then it's not your Bitcoin. And that's something that the products and services that Blockfi is creating doesn't really jive too well with. But I think that the two can coexist. So if you like the concept of your hardware wallet, putting it under your mattress, that's fine. It's a value proposition that Bitcoin has that a lot of other assets don't. But if you want to access things like low-cost credit secured by your crypto or earning interest on your crypto, you're going to have to give that stuff up. And my opinion is that the institutional, not holding your private keys directly, but using these services with other third parties, that is going to be bigger than the holding on to your private keys and some of the harder core opinions of the earliest adopters in the long run.
There's no shortage of hardcore opinions when it comes to the crypto space. One of the things that makes doing this show so fun. Well, Zach, it's been a pleasure chatting with you, catching up on all the things going on in the world of crypto lending. If you want to leave our audience, maybe you've already kind of touched on what's coming down the pike from you guys. You touched on the high yield, quote unquote, savings account, as well as the credit cards. If you want to leave us with an update of when we can expect those, and perhaps you also want to maybe leave our audience with a little bit of a hint, a little bit of a tease. What else is coming down the pike from you and the Blockfi team? Now is the time, sir. The floor is yours.
Just check out blockfi.com, sign up for our newsletter. We'll be rolling out the interest accounts publicly at the end of February, and we'll be rolling out a credit card where you can earn Bitcoin as your reward of choice at the end of this year. So follow us, and we look forward to hearing from you.
And check them out over there on Twitter as well. It's The Real Blockfi, BLOCKFI. Give them a follow over there as well so you can get notifications on all of these latest features and when they're rolling out for you. Zach, I appreciate you coming on. And now we have to keep on rolling into our next segment. It is time for the Bitcoin Breakdown.
It's time to explore the latest trading activity, trends, and developments across the world's leading crypto market. It's time for the Bitcoin Breakdown.
Welcome to the Bitcoin Breakdown. This is indeed the portion of the show where we break down what the heck was trading over the past week in the world of crypto. And we were talking a lot on the last show about, will Bitcoin in particular, will that test some of the lows? Remember in the earlier shows, talking about how it seemed like it was somewhat range bound between 3,500 and 37.5 on the upside. We, of course, broke through that down into the 3,400s and a little bit below last week. And now we're kind of still in a similar range in terms of Bitcoin, kind of right now coming into showtime here, 34.14 out there in Bitcoin. So pretty much hovering right around the 3,400s. The Bitcoin futures over there at CME at exactly 3,400 in that front month contract. The March contract actually 1 month out is actually 33.80, so a little bit below that 3,400 level. Both of those off about 25 handles today, but in a similar range to where we were this time last week. Of course, according to the folks over there at CoinDesk, we actually are coming into the longest stretch of declining prices in the 10-year plus history of Bitcoin. So pretty much the longest bear market right now over there in all things Bitcoin. They have a great article. I encourage you guys to check it out over there. They have some great graphs breaking down the different time periods of the different, essentially three major bear markets that have occurred in crypto, but in particular in Bitcoin. And the first one was 163 days from high to low, and it amounted to a 93% decline. Of course, we have the 2013, 2015 Bitcoin market drop, the bear market, kind of bear market 2, you can call it, which was essentially 410 days. That resulted in an 86% decline in the Bitcoin. And of course, back in 2011, that was the original bear market, a lot shorter in duration, but in percentage points, much more severe. That was only 163 days. So it took a lot less time to sell off, even more percentage-wise than it has now. And then, of course, our current decline, which we hit a top back on December 17th of 2017, 19,764, and it's kind of been effectively mostly downside ever since. We are at now 411 days and counting, so that works out to an 82% decline, again, as of the time this article was written, which with Bitcoin in the mid to low 3,400s at the time of this report. So a little bit off that, but effectively on that range. So that's, of course, fuel for the bears out there, but there is some hope for the bulls out there as well. Of course, Bitcoin has, I guess you can call it, built-in deflationary protections in terms of the halving, actually the cutting in half of the rewards you receive for mining the Bitcoin, and it usually occurs roughly every 4 years, or 210,000 blocks. There's some interesting data, again, also coming out of CoinDesk. They've crunched some interesting numbers on this, showing that perhaps if you are a bull, there is perhaps some cause for interest or indeed celebration, because they're saying here, looking at the other recent halving dates, which occurred back on November 28th of 2012 and also on July 9th of 2016, that they've seen interesting price bottoms. They say the price bottom back in 2012, 378 days before the halving, and then it spiked up 510% back on 2016. July 9th of 2016 is when the price bottomed back then as well. That was the halving date, excuse me. The price bottomed 539 days prior to that, and then spiked up 309%. So if that math holds true, and again, the past is never prologue in trading, but these are pretty much only indicators we have right now. So the halving date is roughly set, people believe, for May 25th of 2020. So we have roughly 500 days left until that. So if you believe that logic, if you buy into that data, then perhaps we're going to see a bottom somewhere in the near future, and then a spike as people start coming back in. Again, that halving going to reduce the rewards by half effectively should decrease the incentive for mining, and therefore, if demand stays the same, all things being equal, we should see a bit of a bullish trend in Bitcoin, because demand is the same, supply is half. There you go. Basic supply and demand out there for Bitcoin. Of course, we have to wait until 2020. That's a long way away. 500 days in the crypto market is an eternity. We saw what happened in just 365 in 2018 and how much the world got turned on its ear and then back again. So a lot could happen between now and then, but didn't want to leave the bulls without a ray of hope, a ray of sunshine out there. Of course, it hasn't been all craziness. We talked about the CME future before. We saw Kraken coming in and essentially acquiring Cryptofacilities. They are actually the ones who produce the data for the reference rate. Remember, the CME futures are on the Bitcoin reference rate, which is an aggregate of multiple different venues, and then they create a future based off that index. The Cryptofacilities is the disseminator of that index. They, of course, also have a cryptocurrency derivatives platform. They use futures, or they trade futures on XRP, Litecoin, Bitcoin Cash, and Ether. So this effectively should add a little bit more derivatives oomph to the Kraken platform. You'll be able to trade futures on those products, hopefully going soon. It doesn't seem like this will have any impact on the CME future right now, because they mention here that they've established a separate legal entity called CF Benchmarks Limited to manage that Bitcoin reference rate. And it sounds like that wasn't maybe included in the deal, or is indeed a separate entity, which is protected from this deal so that the reference rate will continue. Otherwise, I'd imagine the folks at CME may have some issues with that deal. Let's look over here too. We haven't had a chance to get into it lately because there's so many great guests and things, but I want to make sure we touch on it because I know a lot of you traded out there as well. Let's get on into the altcoin universe.
It's time to move beyond Bitcoin and find out what's moving the rest of the crypto marketplace. It's time to boldly venture into the altcoin universe.
All right, everybody, welcome to the altcoin universe. We talk about everything else but Bitcoin. Let's do a quick little top 10 rundown here of the crypto universe. Number one, of course, is Bitcoin market cap, a little bit shy of 60 billion right now, 59.8 billion. Number two, good old XRP, right there at about 11.8 billion, hovering right around that 30-cent level, very close, threatening, but not quite breaking through right now, 29.5. Number three, we have good old Ether with 106, what about 106.03, market cap of 11.1 billion. Number four, EOS with a price about 236 and about $2.4 billion market cap. And number five, Bitcoin Cash, 117.5 roughly, and about 2.06 billion. Then they fall off from there. Litecoin's got about 2 billion. Tron's got about 1.77 billion. Number 8, Stellar, about 1.5 billion. Number 9, Cardano, with about 970 million. And then number 10, Monero with 706 million. So they fall off pretty quickly after the top five. But let's get to number 2 there on the list. I know a lot of you like to trade it out there. XRP saw an interesting wild week in XRP since the last time we gathered together here on the old crypto rundown. There were some rumors that Swift, which is of course the major banking payments processing network, they were perhaps rumors that they were going to announce a partnership with a firm on the blockchain space, which got, of course, all sorts of rumors swirling about some sort of connection, some sort of tie-up between Ripple and Swift. So that sent Ripple spiking up over the 30-cent level at about 32.5 cents. And then, of course, unfortunately, as it has been with a lot of near-term spikes in XRP, it was fairly short-lived, came right back down. As I mentioned, coming into showtime here, we're at about 29.5 cents out there in XRP. So it was a short-lived boost, but it didn't really materialize into a lot. The same can be said for Ethereum over the past week. We saw some interesting moves out there. It had moved, tested some upside as well, got up to around that 115 level, close to it by 114 and change before pretty much turning around to the dark side here. And as we're coming into showtime, pretty much at 106 even. So there were some signs of bullish upside movement out there in the altcoin space. Unfortunately, same thing, very short-lived when it came to that. Same deal pretty much with Litecoin. It was looking a little bullish over the past week as well, hit a high about 35.5. People think, okay, maybe this is a bit of a breakout. For a while there, for pretty much since the better part of the last few weeks, it's kind of been vacillating in this range of about 34 to about 36. Now we've come back down and broken through that to the downside again, coming into showtime here. We had Litecoin 33.65. So kind of a tail across the board of maybe testing some near-term highs, trying to break out a little bit, and then coming back off to the downside. Of course, it's hard to blame it when all the headlines out there in the crypto and altcoin universe have been pretty much resoundingly negative. We had, of course, Bloomberg writing that institutions don't care about crypto anymore, which you've heard a lot of our guests weigh in on that, which is kind of interesting to see the counterpoint on that side of the space. Also seeing stories that continue to fuel the fears over custody. That's why we talked with Zac about custody there, including this Canadian crypto exchange, QuadrigaCX, where their founder unfortunately passed away. And when he did so, he had all of the keys to their clients' cryptos, including quite a bit of Bitcoin, as well as looks like some ETH and a bunch of other, there's Bitcoin Cash, there was a bunch of things on there, Litecoin, some ETH, yeah, a total of about $190 million worth of assets are effectively locked to this encrypted laptop. And the wife even came out and said, his laptop is encrypted, and I do not know the password or recovery key. And despite repeated and diligent searches, I have not been able to find them written down anywhere. So it's a case of you got to find the post-it to unlock the 190 million worth of digital assets. So now, of course, the lawsuits are unfolding, and it's just unfortunately yet another negative story that reinforces the perception out there that it is a bit of a free-for-all in terms of custody and security on the crypto front. And of course, the news from last week didn't help that either. The Cryptopia hack, we touched on it a little bit on the show recently, but of course that was another one of the first big hacks to kind of kick off the new year. That was a New Zealand-based crypto exchange. They had mentioned significant losses, though there wasn't a lot of specificity about how much that actually was. The police were still looking into that. So that combo, unfortunately, didn't really amount to a lot of good news for crypto over the past couple of weeks. And so that combination, unfortunately, not exactly looking like it's coming to pass. Speaking of coming to pass, a lot of people in the ETH space in particular are looking forward to the Constantinople upgrade. Of course, that was supposed to happen already. This is effectively the upgrade that the people have been waiting for for a while. It's supposed to go live last week, a couple weeks ago actually, and now it's been pushed off until February 27th. Looks like a researcher, again, reinforcing the negative stereotypes about crypto, discovered a bug in the software that could let attackers steal the funds in the new upgrade. So the fork, unfortunately, it's not a typical hard fork. It's going to reduce effectively ETH out there for the rewards getting paid to miners from 3 per block to 2. And that's, of course, an attempt to stabilize it a bit, again, reduce the inflation we see out there. So unfortunately, you have to wait until February 27th to see that come to fruition. But you don't have to wait any longer to get your questions answered. It is time to dive on into your crypto questions.
You've got questions about crypto. Who doesn't? It's time to find out the answers to your crypto questions.
All right, welcome to the Crypto Question segments where you guys take the reins. Questions, comments, insights, pearls of wisdom, guest suggestions, all the things you guys like. Hit us up. You guys have certainly been doing that. Let's kick things off here with Tom Jack. Tom Jack, numero tres here. He wants to know, do you think Bitcoin is suffering because it's the first real crypto to break through to the mainstream? So it's encountering all the regulatory and institutional headwinds. Is this a case of Bitcoin suffering all of the slings and arrows to pave the way for some other crypto to reap all of the benefits? I like that. Well-written question there, Mr. Tom Jack. And yes, I think there is a degree of that. Certainly people have been in the space and been active and have been aware of crypto for a long time. But for a lot of the mainstream, for many of the regulators, many of the mainstream players in the space, as Zach just alluded to, these decisions were made recently and it's still seeing some of the ramifications swirling out there. So I do think Bitcoin is encountering pretty much all of the headwinds out there, and it will suffer all the regulation, both positive and negative, and all the other things that go on as a result of that. So yeah, in many ways, Bitcoin is paving the way. And hopefully, we talked about it before in the altcoin universe, hopefully some of these other coins, they're trying to break out there. Hopefully some of these other coins will get out there and actually establish a bit of a beachhead. Of course, we had some interesting data on an earlier show saying maybe the interest in altcoin is starting to hurt Bitcoin as well. So there's a bit of a correlation there, which is a bit of a catch-22. You want the altcoin universe to break free and do its own thing, but if it does too much, it might hurt the mothership of Bitcoin. So there's a lot of interesting things there. But on the regulatory front, on the perception front, we just heard the conversation, the Gemini folks spending a lot of money to try to fight that perception of Bitcoin as the sole domain of criminals and money launderers and narco traffickers. Of course, the folks over there at Blockfi encountering some of that as well. That was the genesis of their business. So there is some benefit to that. But yes, short answer to your question, yes, I do think Bitcoin is suffering all of that. Hopefully, it won't be a question of it's regulated out of existence, like we have seen with some other products, unfortunately, to the point where it's not really viable as a tradable or investable product anymore. Hopefully, we'll see some calmer, cooler heads prevailing, but I think we will see that in some of the other coins that will maybe benefit or suffer from the way that Bitcoin has paved. All right, here we got, so let's see, we got time for, let's do this one here too, from N. Charles. He wants to know, what do you guys think of the Bitmex options offerings? This is an interesting question. A lot of people have hit us up about this and similar, and I've talked to a lot of you out there who are using this. It's been kind of fascinating to see. Of course, Bitmex, one of the biggest derivatives platforms when it comes to crypto. Unfortunately, for a lot of our audience, it's not a viable platform because they are effectively, well, we'll get to that in a minute. Let's break down what they offer first. They effectively, back in April of last year, launched what are effectively options. They don't call them that, but they effectively are. They call them ups and downs, trying to get around maybe some of the jargon and terminology that is terrifying to newcomers to the option space. But the up, you can probably guess it, is effectively a call, and the put is effectively, or excuse me, the down is effectively a put. They are very limited in what you can do with them. You can't sell them. You can pretty much only buy because they're limited by the margin deposit on these. So you can't really get into a levered short type position. They don't have the capital to cover that. So you're very limited. You can buy them, and that's pretty much it. And interestingly enough, they actually put out a statement last April when they launched these products, which is something we'd like to see from maybe some of the other players in the Bitcoin futures realm. Before nonlinear products like options are viable, linear products, and in their case, it's perpetual swaps and futures, and most of the other exchanges is pretty much just futures. They need to be sufficiently liquid. They thought the liquidity profile of their Bitcoin USD and quarterly Bitcoin USD futures contracts were liquid enough. They said there's sufficient liquidity in order to launch a successful options product. We would love to hear something like that from a CME or from indeed a SIBO. Unfortunately, we've been waiting for a while, haven't seen that to come to fruition. So you might say, great, here it is, a listed venue that I could trade these things on, but not so fast. For a lot of our audience here in the US, this is effectively a non-starter. In fact, if you go to Bitmex right now from the US, you'll see exactly what I'm talking about. They put it up there in big, bold letters. They call Section 1.4 their terms of service is that people are located in or a resident of the US or Quebec. Quebecois can't trade either. They are prohibited from holding positions or entering into contracts at Bitmex. I know a lot of you are out there, you're using VPNs to get at it and trading it up. And if it's working well for you, more power to you. I just say that's a crazy way to go. They say right here, they reserve the right to immediately close the account and to liquidate the open positions of persons determined to have breached this terms of service. So they're effectively telling you, if you forget to use your VPN one day and disconnect regularly, or some other way they determine that your IP is coming out of the US or Quebec or one of these other banned areas, they're just going to liquidate you. And that's not a tenable way to have a relationship with a broker, where you're constantly looking over your shoulder, waiting for that liquidation axe to fall. So I can't rationally suggest or recommend to anyone go out here and try to get a VPN and leap through these hoops, because it's just absurd. You can't have that sort of Damocles hanging over a brokerage account. You know, in concept, I'd like to see more of these products out there. I wish they were available to US and others. There's a lot of legal and regulatory reasons why that is the case. Hopefully we'll see some of the listed venues here in the US get up to speed and start launching real options, not these effectively faux ups and downs that you can't sell or can't do anything else with. I'd love to see real options on the Bitcoin futures. That would be fantastic. Our audience would love that. We would love that. And that would certainly be a great way around having to use a VPN. You know, if you just search for what's going on with Bitmex and their options, you'll see all the different workarounds people have to try to trade this thing, which is, A, shows that there's still a strong demand for that, which is great. We love to see that. But B, if you're doing that with your actual hard-earned dollars, you're a crazy person, because it could all get taken away at the first sign of any sort of trouble. So buyer beware and trader beware, quite literally, when it comes to all things Bitmex out there. Unfortunately, that theme music means we've come to the end of another fun show. This program is really fun to do, not only because it gives us the chance to catch in and catch up with the crypto crowd, but also to check in with so many different players in the space and see what they're working on. There are so many different entities working on so many different areas, trying to bring crypto really up to speed as a big boy financial trading marketplace, and all the products that are in, the functionality, the UI, the lending, the institutional functionality, you name it, the custody, the security. So many things are being put in place to make this a more viable place and a marketplace for you guys to trade. So I'm glad you guys are enjoying the program. Keep these questions, keep these comments coming, and we'll see you back here next week for more of the Crypto Rundown.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.